Are you looking for the opportunity to find a home in the Bay Area for a discount? There may be only one area left. Tune in and find out where that is. All right, welcome everyone to another edition of my weekly Friday market update, where I go over relevant news that may or may not impact the local real estate market here in the Bay Area, and where I go over the data as to what is going on in the Bay Area. So let's just jump right into it. First and foremost, let's take a look at the latest mortgage rates. So, looks like the average U.S. mortgage rate actually has increased to 3.21% from a low of 3.15%. Now, interest rates are still phenomenally low. However, hopefully this is not the bottom of the market. Now, the Fed chair did announce that they would do 0%. Or close to 0% up until 2022. So they want to keep it very low. However, as you can see, things have rebounded and gone up slightly. So perhaps people had already factored that in. And as more and more people get back into the economy in the workforce, we're seeing some positive impact here where rates may be at some of the lowest levels already. So if you're on the fence, this is, you're really it's coming down to, you're at historic lows and you're trying to ask for even better. So, I would say take advantage of these times. It's a phenomenal time for interest rates. And there are also many programs that will allow you to even get lower than this if you're able to put a good amount of percent down for a home. So something to be aware of. That mortgage rate has actually risen to 3.21 after hitting the lowest point of 3.15 2 weeks ago. All right. So the next point I wanted to bring up is related to people have been asking me about forbearance. So forbearance, for many that have tuned into the previous sessions that I had, forbearance is a program that allows borrowers that are homeowners to delay payments. Now, what's very interesting this time around versus the previous recession in 2008 is banks and the government have been so far forward this time to really support homeowners in various different ways. And so the forbearance program was a very interesting program where owners could actually skip payment for up to 3 months without showing any evidence as to why they needed forbearance. So many have actually used this as an opportunity, as more of an insurance than anything else. Because as you can see, only 1 in 10 borrowers is quote unquote equity poor. Now this means they're not underwater, but that means the 9% of borrowers have less than 10% equity in their home. So they can still sell it today if they needed to for gains on the property. But it gives you an idea that since the market has risen so much over the last, since the last recession, by over 100% in most cases, that there's substantial equity involved in these houses, or people are not as stressed, number one, to have to sell it at a loss. So they don't have to walk away, which is how actually foreclosures happen. Because if you think about, if you're an owner and if you're a bank, even let's say you lost your job and you can't find a new job, and let's say you had 30% equity in your home, you would just sell that home, then give it to the bank and lose that 30% equity. So that's why this time around, it is very different than the previous time where you had people over leveraged and they shouldn't even have owned a home and they had too many homes and the banks had to take and reclaim them. So it's a very different scenario. So unless the market literally tanks, as in drops more than 10% very quickly, and that there's no buyers, will there be a situation or an issue? So this is fundamentally something that's very important where people have been waiting. Everybody's been waiting and asking me, are foreclosures going to happen? Just wait for the foreclosures to happen. Wait till there's less stimulus. You also have to understand who are the people that are owning those homes and what is their current position. And as you can see, the numbers are very low. So majority are actually doing this from as a insurance policy than actually truly needing it. And there's no, right now, it doesn't seem there's much of a negative consequence for actually going at forbearance. So you can actually just skip payment and then it'll get, for many, I know with Wells Fargo, they'll just tack it on at the end. So I don't even have to pay right now to be in good standing. So it's quite interesting this time around of how aggressive and how easy it is to skip payment without penalties. So something to be aware of related to forbearance. And for those, whether you're investors or just people that are hopeful to see some massive foreclosure events, especially here in the Bay Area where the equity gains is even substantially higher, those odds are very slim, but it's just something to be pointed out. Now, I made the point earlier, are you looking for a bargain? There may still be time to find houses that are pandemic priced. So think about the Bay Area and think about my last video along with my update last week. And think about the areas like where would be most affected because of the work from home policies being extended, but also where prices were maybe already high, or that there's no point to be there anymore. And the location is San Francisco. So San Francisco, think about it. You're paying rent. So I shared it last week. A studio or one bedroom is at $3,300 a month. Literally across the bridge in Oakland will be 30% less. So there is that aspect. There's also the aspect of people would just rather sell or trade their condo, or instead of paying that rent, just buy a place, given how low interest rates are. So a lot of people have been leaving, and there's nothing going on right now. Like there's no social events. There's no, in a sense, the reasons people would move to San Francisco aren't there right now. Now, over time, as things start to open up, we may start seeing an impact. That's actually why you see as well a lot of the companies that are doing rentals, whether they're apartments in San Francisco, they're offering very good rates for 2 months, but they suspect themselves that August will be turned around as things start to open up again and people start getting motivated to go back for the reasons of why people are living in San Francisco to begin with. So this is a very rare opportunity depending on how you feel. On one end, you may say, hey, look, San Francisco, nobody wants to live here anymore. It'll keep going down and down and down, and maybe you'll catch it at the bottom. On the other hand, maybe it's already priced in. You know, maybe everybody has been so scared, and that's it's already factored in. I'm going to show you the prices as well of what has been going on in San Francisco, not from a rental perspective, but from a home ownership perspective. You may be surprised, but there may be some opportunities here. So that's something to be aware of. Now, next point is potential home buyers are going to face historically low inventory this summer. It's been very difficult for most. People have hoped and had thought of that as soon as things start to open up, all of a sudden we may have a flood of new listings because people may assume that those people that had their place would want to, it just got delayed. But it doesn't seem to be happening. And I'll show you the data for every county to see where those trends are and how it looks versus pre-shelter. So unfortunately, as I mentioned many times, it seems like we're going to have a delayed spring, which is the busiest season of the year, happening right now. I'm literally going to show houses every single day. I'm actually recording this on a Thursday night, which is the first time I've had to record it a night before because I'm showing properties tomorrow midday as well. So it's definitely certainly very busy, especially given like everything is by appointment only. So myself as an agent will need to follow the right protocols, but I need to be there with the client to go see properties whenever they want to go see it. So expect this moving forward. It's certainly already playing out, and buyer demand has certainly continued to pick up, which you will see momentarily. Now, what are some other activities that are happening in other markets that are always interesting? So last week, I believe I showed the company Open Door, which is basically a very large house flipper with over billions of dollars of asset of money and also on the books. Zillow Offers runs a similar model in terms of the markets that they are participating at, which is where you are able to sell directly to Zillow. They hold the inventory and then they'll try to sell that. So they're basically a flipper at a massive scale. Now, they have also resumed activity. So they have clearly shown, especially in that business where you're really banking on the increase especially over a short period, that they're banking on that as well. And what's interesting is that the viewership amount for new for sale listings are up 20% over month, which has been the case as people starting to gain more confidence. But you can see that it was also up 51% from a year ago. So if there's any indications of any doubt, feel free to like this video, share with friends. They do need to see this because this data does not lie in terms of the level of activity of what's happening. In this case, these are the specific markets that they're referring to in Atlanta, Dallas, San Antonio, Austin, San Diego, and Sacramento. They don't play in the Bay Area, and I suspect if they do ever play, it'll likely be last, given the price points and also the given most of the houses are quite different than one another. However, it is interesting to see that they have continued to resume their activities. Okay, so let's go ahead and show some of the data so that you can actually visually see the trends itself. I'm going to make this view larger. Okay, so I'm going to make this full screen at this time. So here's what is happening in San Mateo County. This is for residential properties. So a few things that I want to point out. New listings has certainly increased last week, so that has been fantastic. So it basically hit partially of what it was in the previous week. Pre-shelter levels. Not as high as it was before, but it got it better. This week, unfortunately, it dropped slightly, but it's still at a pretty good level, which is quite nice. However, you can see what I included this time is the list price if they ever decreased it. So you can see the figure is about the same over the last several weeks. So it's not a big surprise. I wouldn't say there's much change here. Certainly, a lot of people got very too aggressive of what they thought the price should ultimately sell for. So they had an adjustment, but I wouldn't say it's anything too crazy given these percentages versus new listings. You can see the total contingent pending. We have hit a very high number. So we have more contingent pending in this week than we did previously for all weeks. So it shows the level of buyer demand, but also it's already higher for a very rare time, higher than the amount of new listings that appear on the market. Now, what's interesting is while we are only in the first 11 days of June, it seems to be pretty incredible. You can see the May data, and this actually has to do with single family condos and townhomes have hit a tremendously high level. We are at over $2 million as an average. And you can see June is shaping up to be pretty historic as well. So this gives you a little bit of idea of the San Mateo County, what's happening. Now, Santa Clara County has a little bit of a different impact, which is interesting enough. So the number of new listings has actually dropped. So the number is actually quite low. It's at 323. So we still have a pretty low figure. We're about 20% less new listings a week than previous pre-shelter levels. And as you can see, even of recent times, it's still fairly low. Now, what is interesting is the number of list price that has decreased here. So it's a very interesting nugget versus San Mateo County. So Santa Clara County seems to be a lot more decreasing. Now, it could be a combination of perhaps it got too aggressive initially, or perhaps prices may start to adjust. It's a little bit hard to tell this early, but there are still some signs that we may be able to finally get some relative cool down, which would be nice for a lot of buyers because it has been very competitive. Now, you can see the number that is going contingent and pending. It is still higher than the new listings that are hitting the market. So it's still very difficult for buyers, though. So keep that in mind. Now, as I mentioned, we're in 11 days into the market. You can see June has cooled down slightly. However, it's still pretty close to May figures, which was a record time. So keep in mind, it's always about the baseline. So just because there's a list price decrease, it doesn't always mean it's all of a sudden going to tank. So it's actually kind of cooling off a little bit, which is beneficial, but it's still higher than the previous months. So something to be aware of when it comes to Santa Clara County. And of course, Santa Clara County is huge. So every city will have its own changes. So if you have any questions related to that, reach out to me. Happy to give you my thoughts of specific cities because they're all reacting very differently. So this is Santa Clara County for residential. And last but not least is San Francisco for residential. So this time I actually pulled down what the numbers look like from early June to also what it is currently. And so you can see the volume transaction has certainly dropped significantly. We only have about 54, which is actually about on pace of what it was the last few months. So it seems like we're going about the same pace for single family homes. Condos, we're about the same pace. We're a third way into the month. We're about 43 homes. Now, what is interesting though is look at the median price. The median price has actually already skyrocketed. So it'll be interesting to see how the rest of the month plays out. So San Francisco, we're at $1.815 million as our median price. So I suspect this will likely drop, but perhaps, it'll have to balance out and average out quite a bit lower for this average to be lower. So we may see the year-to-date high so far for single family homes. So it's quite interesting. And you can also see the price per square foot has certainly been a lot higher, even the same time last year. Right now we're at $955 per square foot versus the highest that has been was in March, which was $870 per square foot. So really interesting. Now condo, initially I thought, potentially condos should have continued to have weakness. We should have some pressures. I suspect we may still have that. So the tip, if you're an individual that wanted a discount, because what's interesting about discounts is this: people talk about discounts and saying, hey, look, well, if I can get a discount, I'm going to buy it, or I'm going to be more aggressive. But when the time happens, people say, wait, let's just keep waiting. Let's just keep waiting. If you really wanted a discount, this is your opportunity, right? This is what you've been waiting for. So, what else are you waiting for? And so it's an interesting mentality when it comes to that. So if you wanted that, I think there is a tremendous opportunity here, which may not last that long, especially as things open back up again. But what is interesting is you can see the median price has then shot back up now to 1.25 million so far in the June timeframe. So it is at new highs at this point. Now, there are properties available that have been on the market for some time. So there is some weakness. So if you wanted the discount, there is some opportunity to be able to find it, but also be careful because you can start seeing it's starting to pick up. So what if it actually continues to pick up? Data does not lie. This is what has been these are the transactions that have happened so far. You can see from a price per square foot, we're at $1,056 per square foot, which is higher than the previous 2 months. So certainly things have started to pick up again. So I hope this was helpful for you to be able to see how I think and interpret the headlines that comes out every single week. You can see all the data itself in terms of what is happening in several different markets that have their own dynamics. So if you know of anybody on the search, please, I would love to get introduced, love to help them on this journey. They can be ready right now. They can need my advice for something they want to do 2 years later. It's never too early to go through the planning and the understanding, depending on what their goals are. So be sure to like this video. Feel free to send me a comment if you have any questions or anything that you want to see at the next video. And please do be sure to share it with your friends that could find this applicable and helpful. Other than that, I will sign off. Have a good weekend and see you at the next one. Bye now. Hey YouTube world, thanks for tuning in. I'm glad that you dropped by. If you liked this video, please be sure to smash this subscribe button here. And if you want to see one of my latest videos, please choose this one here. Bye now.